What is going on, guys? Kevin Cage here with another cryptocurrency update. I hope everybody is surviving this absolute bloodbath in the crypto market. Over the past 5 years, I have never seen higher levels of liquidations. And according to Watcher Guru, the top 100 Bitcoin wallets are accumulating Bitcoin at these levels. Now, taking it back to the Bitcoin price chart versus the US dollar, we have over 10 years of price history dating back to even 2011 for Bitcoin. We can see during one of the first Bitcoin halvings in 2012, that led to the first ever bull run. We had a huge parabolic rise, over 5,000%. And in the middle of the cycle, we witnessed a 75% crash. And even from these lows, we still go on to rally. Then after the 2013 Bitcoin cycle, Bitcoin continued to crash 86, almost 87%. It was dragged out for several years until the 2017 run-up. And from that low, Bitcoin rallied over 10,000% yet again. And then looking at the previous all-time high price for Bitcoin that was set in late 2017, we can see that BTC crashed at the end of the cycle 84%. Doing an ABC corrective structure, then March 2020 crash. And during the March 2020 crash, and I would argue that emotionally, this crash that we just witnessed, for anybody that has been in crypto for maybe less than 2 years, welcome, because you just received your first badge of honor. And during the March 2020 crash, we saw Bitcoin crash 72%. Now, since Bitcoin's all-time high price, approximately $69,000 set back in November, we can see that we've crashed wick to wick thus far 62.5%, all the way down to 25K. Now, we're settling back up at 29K, but we need to see strong volume coming through, and right now, all I'm seeing is selling. And now coming down to the daily time frame for the Bitcoin price chart, I saw 360 Trader also tweet this, that we saw some of the highest levels of volume that we saw since May of last year. And if you're curious what I mean by that, look right here on the left side of the screen. You can see the volume right here, and I'm going to go over these candles. Let's look at May 11th, yesterday. You can see the selling volume right here, over 11,000. And now today, it's great to see, over 14,000. But the altcoin market took an even worse hit. There are assets creating new all-time low prices, and some other altcoins are revisiting prices that we have not seen in almost 2 years, since before the cycle. Now, turning the lights on, we have this ascending channel, really just drawing some parallel trend lines here, and we can see that it does in fact obey. Let's go to the weekly time frame so I can show you a bit better. So notice in this case, I'm using this wick. We can see it obeyed it at these levels, turned to resistance. Then as it fell, resistance came here, and you can follow it along. Candle bodies closing, bouncing here like a game of ping pong, turned to support, and then again blasting past, but then falling back, turned to resistance. So you can see that these trend lines are pretty valid thus far on the log scale. And even during the March 2020 crash, we wicked down to that level. Now we can see that we have broken below this trend. So it is extremely uncertain in today's landscape, and we'll talk about stablecoins as well. And now let's turn on the moving averages. I know everybody knows this, and I've been talking about this, but even the 200 moving average, we can see since even 2015, this red line, this 200 weekly moving average, has acted as support for Bitcoin during bear markets or during market crashes. So you can see candle bodies closing on this 200 MA. You can see candle body here, and then retracement. And then even during the March 2020 crash, we can see that candle body still closed, but it did in fact wick as low as $3,800 per Bitcoin just 2 years ago, before eventually rallying over 1,600%. So very interesting times, guys. Also want to update you, I'm not trying to spread FUD or fear, I'm just sharing what I'm doing. I'm putting all my stablecoins I already have. I put all my stablecoins, whether it was Tether or USDC, into US dollar. I'm just not comfortable with the current landscape. It just seems very uncertain, and I cannot take the risk of a stablecoin even temporarily losing its peg. Now, with that said, I believe USDC, operated by Circle and Center, integrated with Hedera, Stellar, ALGO, it's going to be here to stay. But with, upcoming potential regulations, market uncertainty, I just want to err on the side of caution. And keep in mind, right on Twitter, you can click my link tree and see all the crypto services and resources that I use actively. If I do not actively use it, I'm not posting it here. So you can scroll right down and you can see right here, must have OTC over-the-counter broker. This is how the big boys do it. I do not want to have, 6 figures, 7 figures on Coinbase. I want it to be in cold storage, military grade security with the ability to still set limit orders, just like these big institutions that are working the retail market today. So we can see the cryptocurrency market is at $1.25 billion. We're at an all-time high of $3 trillion last year. And the scary thing is, just to show you today, and this is good news and bad news, there is very little utility in today's ecosystem. And with that being said, when regulations come and then utility is allowed to truly flourish and scale without fear of regulatory uncertainty, that is when the floodgates open. And within the top 5 assets, we have 2 stablecoins. That's concerning. You can see that USDC is still holding its peg for now at $1, but beware of wicks. Now, I know some people play the little arbitrage opportunities and they'll set a buy limit for 97 cents. And then when it's back to $1, if their order fills, they'll be able to sell it and do quick flips with large amounts of capital. But for me, that is just too far risky in today's landscape. Even USDT is slowly losing its peg at 99 cents. Now, could it be fine? Yes, but I want to err on the side of caution. Because another stablecoin, a part of Terra's ecosystem or the token Luna, is Terra USD or UST, and it's no longer $1. It lost its peg. That means if you had $100,000 in UST staking for 20% like they promised with Anchor, now that 100K is only worth 37K. That's scary. So I wish everybody well. My heart goes out to everybody that was affected by Luna. I'm also, if I seem down, it's just because I'm worried about people. A trader I know also recently took his life, so it's just been a very emotional week for a lot of people. And if you are in a bad place, please talk to somebody. Set the phone down. Do not look at charts. Wait it out. This storm will pass. And I don't want to sound like a conspiracy theorist, and I know for the past 2 years, I've been talking about Tether's printing. I just want to steer clear. Maybe I'm wrong. Maybe Tether will be fine in the future, but I don't want to risk it personally. So to each their own. With that being said, even if USDC or US dollar coin loses its peg temporarily amidst all of this market volatility, I do believe that USDC is one of the most legitimate crypto stablecoins in the market. Why? Because Brian Brooks was basically with Circle, and he was head of OCC, the comptroller of currency for the entire United States government. I believe that Circle, Center, this whole firm has a pass. And regulators are still going to be a hurdle to get over, but I believe that USDC is safe. Now, before we talk about the XRP price chart and a few other altcoins, I just wanted to demonstrate Terra Luna. Now, yes, I was buying it back in May and June of 2020 at like 25 cents, and I sold it at 60 cents, and I watched it skyrocket. That was the highest level of FOMO I ever had. I know we all have coulda, woulda, shoulda stories. It doesn't matter, but it was crazy to me because from the all-time low of Terra Luna, we essentially did a 100,000% pump. That means it's a 1,000x return in just a matter of 2 years. That is unsustainable. I don't care how groundbreaking the technology is. I never bought it back. I had FOMO, but I am not chasing something that did a 1000x in 2 years because I study the charts. I study the market. And now I fear there's very little trust with the founder. I'm not sure if Luna will recover. I did see us go as low as 1 cent. And it seems like today we are, still at 1.5 cents. Now I want to show you the power of the fibs for the good positive side to look. With the Fibonacci retracement of Terra Luna, swing high, swing low. From this high, it took how long until Luna created a new high? Over 500 days, just like Chainlink, just like QNT back in the day. It was a long and painful wait, and even below the 236, Luna was still crashing 70% during all of this volatility and price swings. What's absolutely crazy to me is conservatively, guys, with assets that I believe have decent tokenomics and utility, I believe from the high to the low, once they break through that 618 to 786 region, we're going to go to the 4.236 historically, and that's what we see time and time again. In this case, Luna did that, another bull flag, and then boom, right to the 13 fib, and then crashed, back testing this region of the 4.236. So conservatively, I look at some of these golden fibs. The most conservative is the 1271618. The 618 is the golden ratio. But Luna exceeded expectations, and what this is a ratio of the Fibonacci. So 8 plus 13 is 21. 21 plus 34 is 55. 55 plus 34 is 89. And the craziest thing is the highest impulse fib that I use, and you can keep going, this is just the ratio, this is how math works, we actually top out exactly. And I'm not making it up, this was perfection on the log chart. We can see the 89 Fibonacci extension topping out around $116, a 1000x. Meaning that if you invested $1,000 2 years ago and you got a 1000x, you just made $1 million. If you were able to sell at the top, and nobody does that, guys. And during this whole time up, it was a bumpy ride. You can see even right here, this was an 81% crash. And it's scary because all of those gains can be gone in the snap of a finger if you don't take profit or at least stagger your sells out. And same thing goes for entering assets right now. For any assets, I believe will be here for the long term and recover, obviously after, 70, 90% crash. This is where all the smart money is beginning to enter positions. Now, this is the XRP price chart versus the Bitcoin price chart. Now, this is something I've been looking at probably 6 to 8 months ago when I lived in Chicago. I was actually doing a voice screen share with Mr. Level Up going through fractals. And as you can see, it looks like this is playing out. We have XRP from the high to the low. We have Bitcoin high to the low. XRP didn't really participate during this bullish cycle. We had Ethereum, Bitcoin, every single asset reaching these golden extensions, whether it's these lower ones or a full 4.236. Bitcoin reached the 3618, market cap reached a 4.236, a variety, like we're talking probably over 20 assets did this. But XRP didn't. What was going on? I know some people blame the lawsuit, lack of liquidity between exchanges, uncertainty, manipulation, whatever your theory is. All I see is this fractal could potentially play out. And what I mean by that is from the high to the low, from the high to the low. Bitcoin, early days, we can see we rejected this 50% retracement with candle bodies closing, and then boom, massive, massive crash below the 236. What do we have here? A huge, massive crash. And this does, in fact, look similar, and we rejected the 50% retracement, the 618 area, just like Bitcoin. This isn't something I've pulled out of thin air. I've been looking at this for a really long time, and it's crazy to see this potentially coming to fruition. Now, Bitcoin really crashed during the March 2020 crash, coming down to that lower level. And I have no idea where the bottom's going to be. Are we at the bottom? Do we have another 50% to go? But anybody that says they know the exact bottom is a liar. The smartest traders, the smartest investors will then begin staggering in. You don't want to just enter once because then you're relying on that single entry price. You want to scatter and diversify that risk. So the best thing to do is if you're entering this market, you want to set limit orders, stagger them. Set 2 or 3. And then when the asset begins to pump, you want to stagger them as well. Once they reach certain levels or even a key retracement level, stagger here, stagger here, stagger here, and slowly de-risk, taking 3 take profits, and then your average take profit could be somewhere in the middle. So it's just a much more profitable and less risky strategy long term. And whether or not you believe in gap theory where we see gaps in liquidity later getting filled, I know that we see this with the Bitcoin futures, but we actually see this within the stock market, the Dow Jones, and XRP. And I know it sounds crazy, but Mr. Level Up, again, right on Twitter, the Mr. Level Up, Mr. Level Down right now. And when he gets bullish, I'm going to be excited because he had gaps on some lower levels on some assets and I didn't believe him. And now those gaps are filling. And he's been one of the few analysts that I really respect because he's genuine and we always compare looks whether or not we agree. And even back here, before we had this run up for XRP when, emotions were at like an all-time low, I did a team viewer session with him, so we shared our computer screens and went through TradingView, and he's the one that showed me the gap for XRP at 1776. And I'm trying to remember if it was on Kraken with the Tether pair, but the bet was that that gap would get filled. And what happened? I actually made a bet with Martin, another guy in the XRP community, that that gap would get filled. And what happened? The gap got filled at 1776, right there. And I know some people say, Kevin, that's because the SEC. Maybe, but it's really strange that it went to 17 cents and closed that one gap. And now I'm kicking myself because I didn't necessarily believe it, and he showed me his API 3 gaps. And what this means is there were gaps in prices, and even when API 3 was at $9, I was like, okay, I could see us coming back to the bottom of this symmetrical triangle, but I don't see us crashing. And I was wrong. He had gaps at these levels, even as low as $1.50. That means all the gaps have been taken out, and now I'm starting to accumulate even more, below $1.50. But definitely check out his Twitter. He has some really interesting looks, and you don't want to just use one single indicator. You want to find as much confluence as possible. Whether there's channels, trends, fibs, RSI, stochastic, volume, other on-chain metrics. At the end of the day, there's an infinite amount of data that you can take into every decision. And no matter how smart you want to sound and give all these facts and statistics, no matter who you are, at the end of the day, all of us make a split judgment. This is a tweet I did yesterday. Ignore this ugly chart. I was just on my phone looking at the monthly XRP price chart. But I want to emphasize this. I believe that XRP survives and thrives in the future after all of this when all is said and done. Those that catch these lower prices, in my opinion, not financial advice, are going to have guaranteed wealth. And just to give some perspective, because life is all about perspective, March 2020 took us to 11 cents, December 2020 took us to 17 cents and closed that gap that XRP had at 17.5 cents. So even using this high, we could use the other highs. That was catastrophic. From the high to the low, XRP crashed 96%. But during the March 2020 timeframe, we crashed over 67%. What happened after the 67% crash? Well, on the macro, we continue to rally well over 1,000%. In this case, almost 1,600%. Then the SEC news came out when they announced they're suing Ripple in December of 2020. So from that recent high of 78 cents, XRP crashed almost 80%, 78%, closing the gap at 1776 or 17 cents. What happened after a nearly 80% crash? History does not lie. From this bottom, we saw another 10x or 1000% pump. Now looking at XRP's 2021 high, close to $2, $1.9796, we have crashed almost 83% wick to wick. Literally backtesting that level before the March 2020 crash. Now, if you believe Bitcoin goes lower, get some capital on the sidelines. But I do believe the storm will pass. And what happens after the storm passes on a macro time frame? Well over a 10x. And all you can do during these difficult times is look at the history. What has history shown us after these types of liquidations? Time and time again, after we witness 70 to 90% crashes, we usually go on a rally. In this case, DAG did a 7,000% pump. Now looking at the QNT price chart of quants, yes, I hold QNT. I'm a long-term believer in this project. I accumulated it early on. But since it's done over 200x in the past almost 4 years, I'm just not interested in accumulating it. What I'm most interested in is finding assets that are still at lower levels in accumulation. Because history shows us, even using this as the swing high to the low, dragging it over, it still breaks out and still reaches some of these golden fibs. In this case, almost a full 34 Fibonacci extension. Conservatively, as I shared earlier, that whole zone of the 4.236. So history does not lie on a multi-year time frame. In a legitimate asset, not something that has faulty code or a pump and dump. I'm not investing in meme coins. And the game is simple. If you don't believe in an investment, especially when it's down in price, don't hold it, sell it. And that's not financial advice, but I hold what I believe in and I discard what I don't. Find your own style, carve your own path. There is no single right way, there is just your way. You know what all these hedge fund trading bots and institutions expect retailers to do during times like this? Act out of high levels of emotion. Instead of just sitting on their hands and waiting. By simply DCAing and waiting on the macro and sometimes doing nothing, you're going to be fine historically. But institutional investors and institutions know how retail acts. They act out of emotion. When we're at high levels of stress, when you just lost a huge portion of your net worth or maybe all of your portfolio, you are tempted to act out of emotion and move your crypto around. Oh, I want to swap this crypto for this. Oh, I want to go into stablecoins and try to do this. Just be careful with that. Me personally, I'm sitting on my hands, and yes, I'm beginning to enter in some assets including Casper and API 3 at these levels, because they are assets that have yet to create a new all-time high price and are building. Also wanted to share this just in case this helps somebody that is leveraging Bitrue, the crypto exchange today. So according to crypto guru ATX, we have Bitrue official has suspended all Tether withdrawals except for BEP20. However, USDC is still operational. Please be wary of this because of the volatility in the markets and some of these strange wicks on the price charts of these stablecoins that we're witnessing. Me, I am not keeping any large amounts of cryptocurrency on an exchange. Put it in cold storage or leverage the OTC broker that I link right on Twitter that is free. Also saw that Becker is actually going to be accumulating some Solana. No thanks. Link, I'd much rather accumulate API 3. I think Link already did a 300x in the past few years, but I wish it well. XRP, yes. Poly, and a small collection of games, and some ADA, some Cardano. All right. Just wanted to share, and I wonder what Becker is seeing about XRP. I know what I see. It's a laggard. It is always the last to perform in the crypto market. And it's a laggard in the market for a reason. Also wanted to share this look by blockchain backer. So he's not a huge fan of trend lines, highly subjective, which I completely get. But looking at this parallel channel, I think this may be on log scale, the Bitcoin price chart, and you can see 1, 2, 3, almost 4, 1, 2, kind of holding that zone. I want this to be the bottom more than anything. I just am shocked that Bitcoin has yet to have some type of relief rally. We are still under 30K. And I know a lot of us have bought the dip and then it dips 8 more times. Also wanted to share this look of Credible Crypto. So as you guys know, he really predicted the beginning of this market cycle to perfection, dating back to even April 2020. Always love his analysis. And check this out. So as we can see, anybody that studies the cycle, I cannot believe 90% of people on crypto Twitter don't even understand what a Bitcoin halving is. They don't understand the Bitcoin cycle. They don't understand that cycles mathematically get longer than the other. This is all data, whether you're using, a log growth curve or anything in between. They get longer, and there's diminishing returns each time. After the halving, the rewards are cut in half, etc. And this is just math, and this is something I believed in. So, he called this perfectly after the halving back in, I believe, May, and we absolutely launched all the way up to those levels. And he called this beginning half to perfection, and this is based off of 2 cycles. You could argue an even previous one, but of course, the first Bitcoin halving was in 2012. So you have huge pumps, but the pumps get smaller for Bitcoin. Of course, the altcoin market is slowly but surely growing, and the length of the cycle each time is getting longer and more dragged out. So he, since 2020 of April, has predicted that this bullish cycle will last until early 2023. Now, he updated the chart, obviously, to account for some new crazy information and just talk about his expectations, so highly recommend checking this out. But if Bitcoin's price crashes below the previous all-time high that was set in late 2017, I'm going to have some difficulties seeing this as being valid. but I still love this look. And last but not least, guys, we have some great news for iTrustCapital holders. So keep in mind, this is completely free. This is a crypto retirement account. I have a Roth IRA here in crypto, and this is 0% taxes, no capital gains. For all you traders and investors, you're paying 25%, 40% in taxes, nearly half your money. iTrustCapital raised another $125 million. Their valuation is over $1.3 billion, another unicorn. And I was with this platform since the very beginning. Over 150,000 accounts have been created, 2,000 5-star reviews, 24/7 trading, and only 1% transaction fee. So it's just like using Coinbase, except for a 401k or an individual retirement account, a traditional or Roth IRA. The mobile application is on the way, and we have some good news.
Hey there! Wondering how to use the conditional transactions feature on the iTrustCapital software platform? Here's a walkthrough to get you started. First, open your mobile app or desktop app. Navigate to the buy-sell area of the app where you would normally place a market order. You may now click on the word conditional in the header, which will change the type of transaction being placed. Next, you'll set parameters for your transaction. For now, let's focus on how to input a conditional buy, and we'll cover conditional sale after. The first parameter you'll input is the conditional price for your transaction.
So overall, guys, iTrustCapital has implemented conditional orders, meaning limit orders, if and then statements. So just like on any crypto exchange today, you can set limit orders, buys and sells. So for example, let's say that Doge is 17 cents and I believe it's going to crash all the way to 8 cents and I want to improve my position. I'm not going to be improving my position on Doge. I'll choose a different asset. But for example, you could do that. You could say if Doge, crashes 50% and hits 8 cents or 9 cents, I could then purchase a certain amount if I have USD in my account. The same thing goes for take profits, so you could actually take a staggered approach. So for example, with Algorand, we're looking at this price, and let's just say that you had some USD on your iTrustCapital account and you wanted to try to buy if we crashed again at 30 cents or 29 cents. That would be an insane discount. So if the price hits 29 or 30 cents, your buy would be executed. That's being patient and smart and potentially letting the market come to you instead of just buying at market price. To look at retracements, we could talk about setting some sell orders. And I mean, even, using this high to the low, I should use candle bodies instead of wicks, by the way. But we can see from this high to the low, where did we go? We hit the 4.236 to perfection. Ooh, and then drag this over actually. Let's see if we hit our golden fib. Look at this. Okay, so we hit the 4.236, and this is actually a pattern that I do see in the market. So from the high to the low, 4.236, you can see we rejected here. We crashed all the way down to our negative fib. So now let's just say that I decided to enter here. Yes, we can always go lower, but now I want to set some limit sells. I'd be playing these levels. So 702 is 147. Let's play it safe and go right before the 1618. Let's just say, 135. So I want to sell, half my position here. Let's go to higher prices, maybe for below the 4.236. Let's just say $5 even. So you could literally set conditional sells to sell 50% here and 50% there, or 25 here, 25 here, and hold 50% for the long term. It gets really exciting. So now you don't have to, sweat and be worried when the market's moving. You can set and forget. So the link for iTrustCapital will be linked in the top of this YouTube video description. Greatly appreciate all that like and subscribe. I hope you guys learned something today, and I'll see you in the next video.